Can something as simple as a trading strategy completely change the way you approach trading? The answer, my friend, is a resounding yes. No matter if you're just starting out or have been in the markets for years, having a solid strategy is absolutely crucial for your success. But why is it so important? Why do traders, especially as a beginner, need to focus on mastering one strategy first? And once he or she have a strategy, what's the next step? Stay tuned because I'm about to share some gold insights, and what I'm going to give it to you in the end will completely blow your mind. But first, don't forget to hit the subscribe button and turn on the notifications so you don't miss any of the strategies, tips, and the upcoming insights that could make a real difference in your trading journey. Let's kick this off with a simple fact. Trading without a strategy is like going on a road trip without GPS. You might get somewhere, but it's probably nowhere you wanted to go. A strategy gives you direction. It's your plan, your guide in the crazy world of day trading. But why does this matter? Because the market doesn't care how much you want to win. It only reacts to the actions you take. A solid strategy ensures those actions are calculated and not emotional. Trading is not gambling. It should never be treated that way. No one builds wealth by gambling. To be honest, one thing that really annoys me on the internet is the number of false traders or so-called gurus promising to turn 1,000 into 100,000 in just a month. Believe me, this is not possible. Trading is not easy money, and anyone who tells you otherwise is selling you a fantasy. But here's what I can guarantee. Based on my own experience, if you apply the right strategy with discipline, it can be your passport to financial freedom. I'm living the proof of this. I started with a $100 account, and through disciplined trading, I turned into $200,000 in just 2 years. That didn't happen by luck. It happened by following a trading strategy and sticking to it. A trading strategy typically consists of 3 stages: planning, placing orders, and executing it. At each stage, you track certain metrics to make sure your strategy stays effective as the market conditions change. Planning is where you set up your rules for trading. You decide things like when to buy or sell, how much to risk, and what signals we will follow. Let's look at a simple example. You might choose to enter a trade when the price crosses above a 50-day moving average. Now, what is a moving average? It's simply the average price of an asset over a certain period, in this case, 50 days. It helps you smooth out price fluctuations, giving you a clear view of the market's trend. So if the price is rising above the 50 MA, for example, it might signal that the market is bullish. Therefore, it can be a good time to buy. Then, placing orders happens when the conditions you plan for are met. Once that happens, you simply follow your strategy by placing your entry, stop loss, and profit targets. For example, if the price crosses above the 50-day moving average, you would place your buy order, but your stop would be below the price by low, for example, and your profit target would be as soon as the market breaks back below the 50-day moving average. Here is where you follow your trading strategy rules and avoid trading based on emotions. You must follow your trading strategies like a robot. Lastly, executing trades is when you manage your trade once it's live. You monitor its progress, and if it's necessary, you adjust your stop loss to protect your profits or exit if things go wrong. For example, if the prices start falling after breaking news about a war, you might want to exit before giving back your profits or increase your losses. Remember to only stick to the plan you made during the planning stage and do not let emotions dictate your actions. Another simple example. Let's break down another strategy using clear rules. Rule number 1. Enter a trade when the price touches a support level, which is just a price point where the asset tends to stop falling and bounce back up. Rule number 2. Set your stop loss 2% below the support level. Rule number 3. Exit the trade when the price reaches 4% above your entry point. If the price doesn't behave the way you want, your stop loss will be triggered and you get out of the trade with minimal damage. If it moves in your favor, then it's going to take your profit target and you're going to make 4%. As market changes, you need to adjust your strategy. Keep track of how it's working, and if it's not doing well in certain situations, make changes. Good traders are always learning and improving. You can create a strategy that fits your own style or use one from a proven trader. The important thing is to find what works best for you. There is no single situation that works for everybody. Now, if you're looking for a shortcut to get started, I've got you covered. I have a few powerful strategies that were personally developed and tested over the years, and they are available for you to explore. If you're ready to test them out, just click on the link in the description below to get access to these strategies and see which one suits you best. But whether you create your own strategy or use one that's being shared by an experienced trader, the key to success is backtesting. Backtesting means running your strategy through historical data to see how it would have performed in the past. This helps you to understand how reliable it is under different market conditions and give you confidence to stick to it when you go live. Also, it is important that you use a demo account to trade first, putting it into action in a simulated environment. This is like a rehearsal before stepping onto the big stage with real money on the line. There is no rush, and trust me, your future self will thank you. And finally, don't forget journaling. This is your secret weapon. Every time you trade, write down what happened, why you enter, why you exit, what you learn. Your journal is like your personal GPS for improvement. A special gift for those who buy my strategies is that I'm giving my personal trading journal so that you don't need to create one from scratch. If you become a consistently profitable trader that resonates with you, it's important to find your own strategy and stay focused on it. Don't let the noise from the market, social media, or trading community distract you. It can easily pull you off track. If you enjoyed this content, hit the like button below and be sure to join my free community for more insights, tips, market updates, and trading strategies. I've left all the links in the description of this video, and thanks for watching. Peace out.